Hey, Kentucky home buyers, if you currently have a mortgage and you're looking to recast, I've created a video here in how you can possibly recast your mortgage loan, reduce your house payment, and get rid of MI if it's on your current mortgage.
All right, today we are diving into a really cool financial strategy for homeowners. Seriously, it's one of those things that's powerful, but not a lot of people know about it. It's a way you can lower your monthly mortgage payments and get rid of a really annoying fee, all without messing with that amazing low interest rate you've got. Let's get right into it. So, picture this. You've got some extra cash. Maybe it's a bonus from work, an inheritance, whatever. Your first thought is, hey, I should use this to lower my mortgage payment. But then you hit a wall. You've got this fantastic, super low interest rate you locked in a few years ago, and there is no way you want to give that up. So, what's the move? Well, the first thing everyone thinks of is refinancing. But let's be real. In a world with higher interest rates, that's usually a trap. You could go through all that trouble just to have the new higher rate completely wipe out any savings you'd get from a lower loan balance. Not to mention you'd be paying thousands in closing costs. Yeah, it just doesn't add up. But what if I told you there is another option? A way that's simpler, way cheaper, and honestly just smarter for reaching your goal? There is. Think of it like a financial power-up that's been hiding in plain sight. Okay, it's time to reveal the secret. It's called a mortgage recast, or sometimes a re-amortization. This is the first part of our strategy, the first punch in our 1-2 combo. So what on earth is a mortgage recast? It's actually beautifully simple. You make one big lump sum payment directly to your loan's principal. Then you call your lender, and they just recalculate your monthly payment based on that new lower balance, but spread it over the rest of your original loan term. And just like that, you've got a lower monthly payment. And this is why it's so much better than refinancing. With a recast, your interest rate and your loan term stay exactly the same. That amazing rate you fought to get, it's safe. And the cost? We're not talking thousands in closing costs. It's usually just a small processing fee, maybe a few $100. So much simpler. Now, who can actually do this? Well, if you have a conventional loan, one that's backed by Fannie Mae or Freddie Mac, you are probably in luck. But unfortunately, most government-backed loans like FHA, VA, and USDA loans, they're usually not eligible. So it's really important to know what kind of loan you have. All right, so just lowering your monthly payment is already a pretty great win. But we're not just playing for a single here, we're going for the home run. Because a mortgage recast is the key that unlocks a second and maybe even bigger win. And here it is, the big one, that large principal payment. It doesn't just set you up for a recast, it can crush your loan-to-value ratio, which could make you instantly eligible to get rid of that awful private mortgage insurance, or PMI. This is the second punch, and believe me, it is a knockout. Let's run a quick example. Let's say you bought your house with a small down payment. Your loan-to-value, or LTV, is sitting up high at 95%. That means every single month you're just throwing money away on PMI, and that can easily be hundreds of dollars. But now, you come in and make that big lump sum payment. You're basically injecting a huge chunk of equity into your home all at once, and that completely changes the entire financial equation of your mortgage. And check out the result. It's amazing. That one single payment could slash your LTV from 95% all the way down to 75%. You just blew right past that magic 80% number you need to hit to get rid of PMI. Think about what this does for your bank account. It's huge. You get the savings from the lower monthly payment because of the recast, and you totally eliminate that PMI payment. You combine those two, and we could be talking about saving hundreds and hundreds of dollars every single month. Now, this all sounds incredible, right? But here's the catch. You can't just expect that PMI payment to disappear on its own. There are very specific rules you have to play by, all based on a federal law called the Homeowners Protection Act. So let's break down exactly what you need to do. This is the number one question people have. Okay, I made the payment, I did the recast. Does the PMI just poof, vanish? And the answer, and please remember this, is a huge, emphatic no. This is probably the most important part of the whole strategy. A recast makes you eligible to remove PMI, but it does not happen automatically. You have to be proactive. So the law gives you two ways to do this. There's the fast path, which is called borrower-requested cancellation. That's what we're focused on. This is where you tell the lender to cancel PMI once your balance hits 80% of the home's original value. Then there's the slow path. automatic termination, where the lender eventually has to cancel it anyway. Trust me, we want the fast path. And now, let's just bust a giant myth right now. A lot of people, and sometimes even people at the mortgage company, they think you have to wait for a seasoning period after making a big payment. That is totally false. When it's based on your home's original value, there is absolutely no waiting period. You can request it the very next day. So, what do you actually need to do? It's a simple checklist. First, get your loan to value to 80% or less based on that original home value. Second, you have to send a formal request in writing. Third, you need to have a good payment history, no recent late payments. And last, your loan just needs to be current. That's it. Pretty straightforward. Okay, we've talked about the what and the why. Now it's time for the how. Here is your clear, super simple, 3-step action plan to pull off this amazing 1-2 punch. Here's the whole game plan. Step 1, make that big principal reduction payment. Step 2, immediately contact your lender to request the loan recast. That's what lowers your monthly bill. And then step 3, as soon as that recast is done, you send in your formal written request to cancel the PMI. Just remember, pay, recast, request. Simple. And here's one last super important pro tip. Before you do any of this, just call your loan servicer. The federal rules are the same for everybody, but your specific lender might have their own forms or a slightly different process. Seriously, a 5-minute phone call before you start can save you so much time and frustration later. So we'll leave you with this question. If you're a homeowner with a conventional loan, a great rate you want to protect, and some extra cash, could this be your secret weapon? Is this one smart payment your key to finally unlocking a lower mortgage bill and saving hundreds of dollars every single month? You know, it is absolutely worth looking into.
If you have any questions about refinancing, removing mortgage insurance, or recashing your loan, give me a call, 502-905-3708 or